You're looking at buying a house that's not compliant or doesn't have a CCC, or part of it doesn't have a CCC, and you're worried about the insurance. Well, you come to the right place. I'll talk you through what you need to know. First, code of compliance. What actually is it? Well, a code of compliance certificate is an official confirmation from the council that a building meets the New Zealand Building Code. It's the final approval in the building process, but not all houses, properties have one. Many homes from the 90s and early 2000s, especially those with monolithic cladding, never got their CCC. Some because the final inspection wasn't done, others because building regulations changed before the process was even completed. The leaky home crisis led to stricter rules, and properties that were compliant when they were being built are suddenly out of spec. In addition to this, people often do their own renovations at home and don't apply to the council to get these consented or to get their code of compliance certificates. And some of these might actually not be in compliance. And is this a problem? Or maybe the property was so old that the documents have been lost. It might have been compliant, but you don't know. It's not the end of the world. If a property doesn't have a CCC, getting insurance can be tricky. Insurers will often cover these homes, but with key exclusions. They usually won't cover costs to bring the building up to code. You see, insurance companies are designed to put you back in the place you were beforehand, so they're not going to pay to consent or bring something up to code that wasn't up to code in the first place. They're also not going to cover damage linked to non-compliant work. So if you rewire a bathroom yourself at home without an electrician that's non-compliant, they're not going to cover the costs if the house burns down due to this faulty wiring, because of course it wasn't up to code. Homes with monolithic cladding, they face even more exclusions. Water damage, weatherproofing failures, and moisture issues are often not covered. This is mainly due to these just not being an unforeseen event. If a house is of this era, then it's almost a guarantee that these issues are going to come up. And insurance companies are only in the business of providing stuff that's unforeseen. If you're looking at buying a property without a CCC, just do your homework before making an offer. Get a detailed building inspection, especially look for someone that's got experience with non-compliant homes, especially if monolithic cladding is involved. Moisture meters and thermal imaging are essential. Most insurance companies that we deal with actually will provide cover for these non-compliant houses, but they want to see evidence that the house is in great condition. Providing a building report is the best way to do this. Next thing you want to do is going to go and get insurance pre-approval. Don't assume you're just automatically going to get cover. Insurance companies are getting more picky by the year. So what you want to do is you want to go get a quote. Make sure it's got no exclusions before you go unconditional the house or go to an auction. In addition to this, it's always smart to talk to your lawyer and a mortgage broker. Not all banks are going to lend on these non-compliant properties, and the legal risks can be significant. And lastly, check the council records. Get a limit report and see if the compliance issues are officially recorded. For owners of the non-compliant properties, options include applying for a certificate of acceptance. So this will actually address these key compliance issues, and it will check that the home's been maintained properly, especially if the cladding's involved. Working with an insurance broker who specializes in tricky properties can also help. We fortunately see hundreds of these, so we know which ones can be insured and which ones can't, and we know where the issues generally lie. Now let's look at this hypothetical situation just to make sure you don't end up in the same boat. Graham's father went to look at a 90s home with monolithic cladding and no CCC. He went to the auction, bid on the house, and his bid was accepted. But he hadn't done his due diligence, and he didn't realize that insurance is not going to be available without exclusions due to the house and the current issues with it. So that Graham's father fortunately lost his deposit because he didn't go and do these due diligence. Make sure you get a quote, you get it approved by the bank before you bid on any properties. Again, it's not impossible to get insurance on these properties, but you just want to make sure your ducks in a row so that you don't run into problems further down the line. Now, buying a non-compliant property, I'm sure, can be a smart investment because a lot of these houses, the more people that, of course, have difficulty getting insurance, the less people that are going to show up to the auction or put an offer in. But only go in with your eyes open. You've got to understand the risks and secure the right insurance before you make the commitment. If you've got any questions, just feel free to drop us a comment or give us a call, and we're more than happy to help. As again, we see these properties all the time, and we know all the pitfalls and what to watch out for and what can be done and what can't.